He is the founder and CEO of Startup Council. Now they have put us on live. So I will restart. Thank you everyone for joining the LinkedIn Live event today of Startup Game Changer. Today we are going to talk about pitch deck that gets you funded. Very important for any startup founder. I have a guest speaker today. His name is Scott Fox. He's on the screen now. He is the founder and CEO of Startup Council. He's a grad of Stanford University. He is a startup ecosystem player, have been investing in startups and helping startup founders build their startup company for quite some time now. So welcome to this show, Scott. Why don't you introduce yourself in 1 to 2 lines, and then we will dive down into the topic today.
Sure. Hey, Anshuman. Hi, everybody. Nice to be here. Thanks for having me. I'm Scott Fox. Like Anshuman said, these days I'm mostly an angel investor. I've got a couple decades of experience building startup companies, my own, other people's. I've written these books behind me. The 3 in the middle are in English. The rest are in other languages around the world. And I spend most of my time these days as an investor or mentoring startup companies and ecosystems around the world. So happy to be here if I can help.
Thank you so much, Scott, for giving us the time. So for the viewers, if you have any specific questions, please put it into the chat and we will take it in the order that it comes. We are going to talk today about the pitch deck. And as you know, pitch deck is the most important document that you will have that will, get you funded, because that is the intro document that you send to investors, be it friends and family rounds, be it angel round, or be it a VC or, a Series A, Series B round. Pitch deck is always going to be there. And there are certain slides that must be in there, which sets you apart from your competition, that sets you apart and tells your startup story. So, Scott, there has been a lot of conversation around how big or small a pitch deck should be, how many pages are a good number. And I remember, you guiding us in Startup Steroid, where you said that, there should be 3 types of pitch decks. One is the email pitch deck, which is a long one. So today we'll be discussing that. Then the other one, a pitch deck that you will be pitching with in front of investors, be it an online or an offline event. And the third one is if you are pitching somewhere as an elevator pitch, and if they allow you to put one slide up on the screen that, how that slide should look into. So let's talk about the long pitch deck. That is the pitch deck that you generally send as a PDF document or as a link to your prospective investor. So what should be included in there, Scott?
Sure. Well, happy to share my opinion. And there's no right answers here. It changes for every situation. And that's one of the things that a lot of founders have trouble with, is they think that there's one answer, like one key for the lock. But every lock is different and every key needs to be a little different. So you have to adapt. And I know that makes it harder, but you have to be ready to change your pitch kind of on the fly. And that's why we talked about 3 different levels. I want to back up one step, though. The point of a deck is not to get funded. The point of a deck is to get the next meeting. And that's what a lot of founders miss. If you're new to the world of startup funding, you think often that if you just say the right thing, suddenly they're going to write you a check. And it's not that easy. Investing takes multiple visits and multiple relationship building interactions. So your first interaction is often a deck. So the deck should be appropriate to the amount of time you want them to spend and intrigue them to want to know more and ask questions and then lead to a longer conversation. So with that as a start, the longest deck is the full explanation. And this is an email deck, like you said, probably something you're sending beforehand, but you want to be careful that it's not too complete so that they don't, they get bored and click away. Investors like us, Anshuman and I, we get dozens, hundreds of these, and we've certainly seen thousands of them over the years. And it's got to be interesting and get to the point really quickly. We don't need every detail of your company, your product, or your vision. What we need to know is, how are you going to make money? How is this a business? And get to that quickly. So that was kind of a broad answer, Anshuman. I don't know if you want to get more specific, but that's where I think it should start.
Yeah. So in a long pitch deck also, what should be the structure, Scott? How they should start? Is it going to be a storytelling exercise where they are telling you why they started this startup, and then how do they take it through? What should be the structure of a long pitch deck?
Yes. Well, again, that's up to the situation, but what we really want to see as investors is this an investable business? Not is this a good product or is this a clever idea? But what I want to see is there a business here that can grow really rapidly and really large so that it returns the capital that we invest? This is a business for us. It's not, unfortunately, about your vision or the product or even how you want to change the world. But what's the business? So to answer the question more specifically, the most common format usually is some sort of, I see a problem, here's our solution, here's why we're doing this, who is doing it, meaning the team, and who are the customers that are interested, and then how is it going to make money? Like that's kind of the basic problem, solution, profitability, potential, and team. That's kind of where I would start. And then you expand and contract depending on the amount of time you have. So when I say expand, I mean maybe adding more points, like you can certainly talk about the competition, for example, or your go-to-market strategy, or your previous fundings, or your expected fundings, like the milestones you expect with the fundings. Those are all additional points, but you can also go deeper into each of the points. For example, how big is the market? Why do you think it's that big? Who are the customers? What customers do you have to date? Every point can be drilled down on, and that's your challenge. And that's why we're having this discussion, I think. How can founders present their company in a way that's in depth enough to be interesting, but not so in depth as to bore us so that we get distracted and lose attention and move on to the next deal? It's a challenge.
Yeah. I feel one job that each pitch deck should do is to grab the attention of the investor. So the graphical elements are also important. The choice of words are very, very important. You shouldn't be writing paragraphs and paragraphs in your pitch deck. So let's talk a little about that, Scott. In your experience, what you have seen, which has stood out of so many other pitch decks that you see, how important is the graphical element, and what is the best way to do it? Would you, tell the audience some of the website, if you remember something about the icons from where they can use it, or where they should go to put together a compelling pitch deck that really gets funded by angel investors?
Yeah, that's a good idea, Anshuman. Like you should go out and look at other examples. This doesn't have to be made from scratch. If you do a simple Google search of pitch deck examples, there are many blog posts and collections. There's even whole websites that just collect successful pitch decks. And that's a great place to start, just to give you ideas. And then, of course, Canva and other systems like that offer templates these days. And you can even use AI these days. If you you type in, I guess, to an AI and say, give me a business plan for this kind of business. If you do a little bit of prompt engineering and ask specific enough questions, it can spit back things very nicely and very quickly. In terms of grabbing attention, I think you hit on something important there. First of all, the text can't be too long or too short, but it is longer in an email deck, right? You have to think about the recipient. What are they? Are they receiving this deck in their email? In which case they're going to be reading it on their desktop computer, or are they looking at it on their phone? You can probably put in more text than you can if you're in a presentation situation, right? If you're standing in a room in front of 50 or 1,000 people and they're seeing the screen from yards and yards away, then the text has to be less text and bigger, right? So you have to just think about how this is read and how it's going to be received. And then in terms of grabbing attention, I'm glad you brought that up, because that's something I see quite often. A startup will have something great going on, but they get so stuck in a template, like we have to talk about the problem and the total addressable market, and then we have to do this, we have to do that. And then like 6 pages in or 10 minutes later, I'll hear, wow, we've got 50% monthly growth. Whoa. Or we received $10 million in non-dilutive funding from the government. Wow. Or we have 6 PhDs from MIT on our team. Wow. Like things like this. Like in the news business, they call that the lead. And if you bury the lead, then we fall asleep. So to Anshuman's point, if you have something important to say it. Like lead with that. Don't worry about my advice or Anshuman's advice about how it should go. Tell the story so that you get attention. So I think you're exactly right, Anshuman. You got to get our attention and then work backwards from that, right? If whatever it is, and then fill in the blanks. Don't be stuck on a formula because you think that's what we want to hear. Think about what you would want to hear if you were an investor. What makes this exciting? And this is really about excitement, especially for those of us who are angel investors. Honestly, we kind of do this for fun. So if you're not fun, we're going to move on to the next deal.
Yeah, sure. The art of storytelling in a pitch deck.
Mhm.
But let's put some light on that. How they should build their story.
Yeah.
Should it be the starting with a problem slide, solution, then the product, then the business model, go to market strategy, competition, team, financial, why now, and the ask? That
Perfect.
should be the process. Or as you said just now, that if you have some numbers to boast on, you have got non-dilutive funding, or you have a term sheet in place, or you just hired a bunch of people and you signed up with a large customer, how to fit all those things into a slide deck.
Yeah, that's right. Well, if anybody was listening, Anshuman, you just gave a great review of a classic outline for a template, right? That is, no one would complain if you did that. That's like perfect, except if you have something better to say. And that's what I guess I'm trying to encourage, is give you the confidence to say what you think is important, because we don't know. We see lots of plans. We're not experts. We may be intimidating because we control the money, at least at this initial stage, but that doesn't mean we know everything. You are the expert. So you got to step out and tell us what's important about your business and what's most exciting. So a story is important. I'm of two minds about this, Anshul. I'd like to hear what you think too. A lot of times it does make it more interesting to tell a story if there's a reason perhaps that you started this business because something in your family background or your industry expertise, you saw a market for this, a problem to solve. And you often hear that, for example, in medical technology or life sciences companies, right? They're literally saving lives, right? And those can be very compelling stories. It's a little harder sometimes if it's a consumer app, but you can still maybe tell a story around it. And I would recommend that because that gives us a story, right? Humans are naturally wired to listen and tell each other stories, and we can follow the story along more easily if you do that. However, and this is where I'm maybe a little controversial, or Anshum, I'd like to hear what you think. A lot of people get so caught up in the story that it misses the business, right? And I hear a lot of people spending time on, it's got to be about the narrative. You've got to tell a story, blah, blah, blah. And you know who says that the most? Storytelling consultants. The people who really want you to hire them to help you with the story, right? Because you're an engineer or a doctor or or a product person, whatever, but you're not a story person, and they really want this to be a story, so you can pay them. I would rather hear a bunch of numbers that tell the story, and I can figure it out. But again, you have to balance that with being interesting and making the presentation compelling. So something in between there, I think, is what you need. A story that ties it all together, but that is still really about the numbers in the business, because that's what I want, numbers as an investor. What do you think of that, Antoine? Is that?
Yeah, absolutely. I have also seen so many pitch decks in our pitching event and all. Storytelling is fine, but ultimately the growth where your startup is, these are the things that our angel investor is looking into. You could write a very dramatic story that why did you start this project, and it could be very, very compelling. But if the numbers are not there uh, to give the expression that this is an investable company, then stories, they are great to hear, and it evokes your emotion. But an angel investor is not going to invest in your startup just on emotions. The
Yeah.
number has to tell the story. So number is the best way to say, just show the growth where you are in your journey. How did you did this quarter in comparison to the last quarter? Did you hire more team members? uh, how many leads are there in the pipeline that you will be closing in the coming quarters? Those
Yeah.
things are very, very important.
Yeah, I agree. I
But,
think that's the
yeah,
key phrase. Growth is, if you want one answer, what your deck should tell the story about, it's growth, because growth solves almost all problems. You don't have a perfect team, fine, but we're doubled our revenues. Okay, we're not exactly sure what the product looks like, or our customer acquisition cost is a little high, or whatever it is. If you're growing like crazy because customers want what you have, that solves a lot of other problems, right? It forgives a lot of those other sins. Obviously, you can't make the money up on volume if you're losing money forever, but growth is what investors are looking for, especially in
yeah,
software. Because if you're not growing, then you haven't proven that anybody other than you cares. And if you're the only one who cares, why should we care, right? Customer driven growth is what we're really, really looking. That's the secret weapon.
Yeah, and any revenue that you have coming in through your customers, that is a great story again in itself.
Yeah.
But Scott, let's talk a little about the financial slide. Every pitch deck has one. I have seen some of the slide decks where the founder has copied a complex Excel sheet and posted, on the slide deck, and it is so difficult to read when you are projecting it on a screen and somebody's sitting 40 feet, away from the screen. What is your input on a financial slide? What are the key factors that they should put into the financial slide? And if they want to show projections and things like that, can it be part of an annexure that goes as an Excel sheet rather than a copy of that Excel sheet on a pitch deck?
Yes. Yeah, I agree. We've seen lots and lots of slides that end up being like an eye chart. And to get personal for a second, you got to remember most angel investors are older people. They don't necessarily have the best vision. If you're a 25-year-old founder, the people watching what you're presenting probably don't see as well as you do. So it helps to make things big and clear. And it's hard to imagine that when you're younger, but as I've gotten older, my vision isn't quite what it used to be, and I can sympathize now. So if you're going to put something up on the screen, make sure, I don't know, pick a number. The font is at least 15 point maybe, and it could be 30 point, right? If you really want to be sure people see it. And financials are the perfect example of that. Financials are better presented perhaps as graphs and charts, because then you can see visually the picture and I can absorb the information faster. But I think you're right, Anshuman. You need at least some anchor numbers. Again, investors eat numbers. This is what we need. Otherwise, we starve. And we'd like to see just simple, right? What are the revenues? What are the costs? What's kind of a gross margin that you're making, meaning the kind of rough profit that you have after your costs? And then really, again, the key here is the growth. If you just had that and say, whatever, we're doing 100,000 a month, our costs are 110,000, so we're losing a little money, but our growth, so our margin is roughly this, and then our growth is hopefully double-digit growth of some compounding way, just something like that. We're just trying. We don't need to know everything during your presentation. We just need to know enough if we're interested to have another conversation. So you don't need to unpack the whole financial pro formas for 5 years, because we know those are assumptions, right? They're assumptions compounded on assumptions. In other words, it's BS, right? But it shows you understand the business enough to project. So we want to see some kind of future estimates. And again, growth, I think, is the key thing.
Mhm. There is a question from one of the viewers. How can founders effectively demonstrate their market understanding without overwhelming investors with data? So founders effectively demonstrate their market understanding without overwhelming investors with data. What is
Yeah,
the best way to?
that's a good question. Well, some data is necessary. So you weren't saying this, but let's take your question literally. If you have no data, you're just theory, and we're not interested in theory. Theory doesn't get funded anymore. So there has to be some data. And you weren't saying that, but I'm just trying to make the point, right? There has to be some data, some numbers, like what we just talked about. Anshuman asked, what are the basic numbers? And we just talked about that. I think that's where you start. So in terms of market size, the classic formula many of you know, I know Anshuman does, is total addressable market, total serviceable market, serviceable obtainable market, something like that, right? It's like the world is this big. We think we can reach this many, and realistically, we can really reach this many. That's a fine way to do it. Most investors have seen that so many times now. This is a good point, actually. It depends on who you're pitching. If these are people who don't know that market, then you probably need to do that. But if you're pitching a specialized angel or VC and you found them because they have expertise in this market already, you can pretty much skip that slide. You're wasting their time and yours. They know the market, right? If you're a seed stage aerospace company and I'm that kind of investor, we don't need to spend time on how big is the aerospace market, because we both spend time there, right? So get to the point. Use your time better. But the minimum is some kind of idea of how many customers are out there. And really, we want to get at that growth number. So how many of them have you converted, or are you converting, or at least sound like they're interested in converting? And this gets back to the dirty word, Anshuman, we haven't said yet, which is traction. And that's what people really want to see these days. Ideas aren't enough anymore. You need to demonstrate some kind of traction. So I think, Saurav, the question's a good one. You don't want to overwhelm us with data, but you need to show enough that it shows you have talked to somebody outside your team, meaning customers. They are interested, and then give us some numbers about their adoption rates or interests, and customer acquisition cost and churn. It really is kind of an equation and a spreadsheet, but I think your point is a good one, and I would recommend it to everybody. You don't want to overwhelm us with data, because we'll get there. You got to first spend your time making sure we understand what you're talking about, because so many founders come in and just start talking, and we're not even clear what it is they do. And they dive into these numbers, and we're like, okay, the numbers look good, but what do you do? Like, how did you get there? And spending a little more time on the context of what you do, and what the specific products and services are, I think is probably a good idea too.
Great. Thank you, Scott, for that. I'll take another question. What are some of the common mistakes to avoid when creating a pitch deck?
Oh yeah, common mistakes. Well, you mentioned one at the beginning that I'd like to visit again, which is, what slide do you leave on the screen? A lot of times people end up at the end of a presentation. They've spent all this time explaining their business, and then it goes into Q&A. And this isn't a live situation. And the Q&A could be 5 or 10 minutes. And this is with the people who are really most interested. And all they have on the screen behind them is a slide that says, thank you. And that's nice, but this is valuable airtime for you. So I'd recommend a slide that says, reminds them of what your company name is, what your name is, and your contact info at a minimum. And then maybe something like what your ask is. Remind them what the deal is, because at the end of the day, what we're really interested in is the deal. So we're raising $5 million on a 20 million post money safe, or whatever it is, right? Just put those up there, because that helps us remember who you are. Because especially in a pitch competition situation, we might see 10, 20, even 50 companies in a day. And you want to make it easy for us to remember who you are.
Yeah. There is another very important question. Medical devices, biotech, and pharma companies are banned for having any sales until after FDA review and permission to begin sales. For highly innovative devices, a clinical trial is required. So this may delay first sales by 2 years. What alternatives to sales define traction for life sciences companies?
That's a sophisticated question. Good for you. and I'm going to ask Anshuman to join me on this one, because I'm not a life sciences expert. I'm more of a software guy, but I'll take a stab at it. Traction in this case, well, in any case, honestly, means showing that somebody other than you cares. So if you can't have actual sales, what can you show? And that can be anything. Anything is better than nothing. If you say, I just have an idea, we can't get involved because we don't believe you, frankly. We don't know you. There's plenty of people who've got some kind of traction that we're going to talk to instead. So some kind of traction, even if you have no sales. Well, how many customers have joined your mailing list? How many came by your booth at the trade show? If you put an ad up, how many people click on it? And what are the click-through rates? I don't know, Anshuman, what do you think? Stuff like that, right?
Yeah, a couple of things on med devices, because, in our organization, for which both of us are part of, TIE Southern California, we have some med devices guys over there who are our charter members. And then I have also attended multiple Octane event, who does a lot of med devices and health tech, those type of investment, including ophthalmology, where FDA approvals and, research and, different types of research are involved. What I have seen in their pitch deck is they start talking about all the grants that they have got, or where they are in their approval journey. That, I don't remember all the terminology, but, I have heard them say that, we have gone through the clinical trial number so-and-so. Now the next phase is starting on such and such date. And this time the sample size is going to be that much. So that also shows that, you are progressing in the startup journey. And if I have even heard potential acquisition that you have already started discussing, because all the founders who are in the med device or biotech pharma companies is not trying to build or innovate and then take the product to the market. They want to sell it as soon as they get the FDA approval. And for that, they have already started talking to their prospective buyers. So if there is an interest, or if the buyer has already started funding you for your expenses, then those are the traction numbers that you can certainly say. And also the investor that who have put in money behind you, other than just the government grant, that will also go a long way. That, hey, I have an ophthalmology product, and these are the investors who have already invested in my company or my idea. So that also shows that somebody who is a serial ophthalmology investor is having belief in you. So
That's
that will help you with some of the other investor groups that you are talking to.
Yeah, and I was thinking exactly, and to build on that, some of those people might be advisors, so you could show that they're board of advisors. So your specific product is new, but in this field, accomplished people who know this stuff, PhDs, MDs, previously successful entrepreneurs, they are investors is the best, but even advisors, like they are respecting and appreciating what you're doing. And so it isn't just you again, it's not just you by yourself. It's some kind of growth and progress, validation from others. And then even farther afield, there could be studies in this field say, well, we're pretty confident this is going to work, even though we can't prove it yet because of this study and this study and this study. And then, of course, if there's any early results from preclinical trials, anything is better than nothing for traction.
Yeah. Thanks, Scott. I have another question from Yogesh Meena. What could be the important KPI for early stage SaaS?
Mm-hmm. For SaaS, software as a service companies, we're really looking at revenue, and then recurring revenue, and then churn, and then, well, I skipped over customer acquisition costs. So how much does it cost to acquire a customer? What's the lifetime value of that customer? How often is it recurring? And then how many of those people stick around, and for how long? That's kind of what we want to see. Because if you have a good acquisition cost, you can acquire new customers that are worth more than you paid for them, and they stick around a long time. That's great. And then the next thing is, how fast is that growing? Some kind of, they call it sometimes a viral coefficient. So how many of their friends are they bringing as well? And classic viral success stories are ones like that, where I like it and I start paying, and then I tell my financial man, he starts paying, and then he tells his friends, and it snowballs. That's the SaaS ideal. So if you can find KPIs like that to measure against, and they're positive, greater than one multipliers, it compounds. That's why SaaS is so popular, because it can compound on its own and take off in a very profitable way.
Yeah. Thank you for that great answer. Sunny Naidu, what are the 3 most important things an investor look for in a tech startup?
Right. Well, Sunny, this is a great question. I'm actually working on my next book, and this is what I'm trying to share. So it's a perfect timing for Anshuman to help me invite me on today, and we can think about this together. So the number one thing is, you have to have a business that is going to make us money. People miss that point. As an entrepreneur, your goal is to create something, solve a problem, maybe solve a problem you've had in your own life. And those are totally legitimate goals. Unfortunately, as investors, our job is to make money. We almost don't care what you're doing. If you have a business that is really going to spin off money, we're going to be interested. It almost doesn't matter what the field is. And we want to hear from you that you are investable. So that's one. The second is that you are somebody who can really do this. We don't want to invest in second and third rate people or teams. We want to invest in the best in the world. Why wouldn't we? But the failure rate is really high. So why are you the person and the team that is going to do this better than anybody? I mean, anybody. Don't think you can get by being a 10% improvement over what's out there. You really have to be aware of the competitive alternatives for us as investors. We don't have to give our money to you. We'll just put it in the bank. The interest rates are up. We'll just compound our money that way. So you have to convince us that the business is investable and you and your team are amazing. And then the other, of course, again, is growth. Is this really going to happen? Is it happening? And the more it's happening already, the easier it's going to be to get money from us.
Cool. Yeah, thank you so much, Scott, for that. When we started this LinkedIn Live, I said that we'll be covering 3 pitch decks, but we are at the 29th minute. I would request Scott, let's work out a schedule for another pitching, pitch deck. When a pitch deck, somebody is showing online, offline, and how it is different from the emailing pitch deck. So we will cover that in our next segment. Maybe in next couple of weeks, because that alone will take some time. Because, but just for the audience, we have sat through so many pitch deck where the founder is reading from the slide, and that is quite awkward. That either we can hear him or we can read what is there on the slide. So it looks really dumb to me when a founder starts reading what is written on the presentation slide and trying to take us through line by line. So just give a precursor of that, Scott, and then we will end this call today. That how a pitching pitch deck is so much more different from an emailing pitch deck.
Yeah, that's right. You really need to practice. That's the simple answer. It's hard to be a good public speaker, and you need to know your story well enough that you can do it from heart, even without a deck. So you've got to boil it down, and again, it's got to compress to the time available or expand, because you don't know if you're suddenly going to be in an elevator with somebody for 30 seconds or the elevator gets stuck and you have half an hour, right? That you've still got to tell the same story, but in more detail. So I would practice is the short answer to that, I think.
Yeah. Thank you so much, Scott. Thank you, audience, for joining in the LinkedIn Live event today. We'll be having another event on July 30th, a Tuesday. We are going to talk about digital marketing for startups. So I would request all the founders to come join, learn from the expert that what is a typical digital marketing package that you must do for your startup to get enough views, or the investor groups knows you through your digital marketing effort, how that can be done. So we'll be talking about that in our next LinkedIn Live event on Tuesday, July 30th at 9 a.m. Pacific. With that, I would like to end this call today. Thank you so much, Scott, and we will be in touch, and we'll be doing another event with you talking about the pitching pitch deck. And we will take people through. So I hope all the audience liked the show today. Thank you so much for joining today. Thank you.
Thanks, everybody.